Welcome, and thank you for joining us today. Today's webinar, titled Jumping Through Hoops, Staffing, Automation, and Compliance Challenges in Finance and Accounting, is brought to you by Robert Half and the Financial Executives Research Foundation, the research arm of Financial Executives International. We will discuss accounting and finance issues impacting public and private companies in North America based on our recent Benchmarking the Accounting and Finance Function report. Before we get started, I'd like to go through a few housekeeping items. Please note the small icons across the bottom of your webinar dashboard. They provide access to various tools, including technical support, an evaluation survey, today's slides, and speaker bios. We will have a Q&A session at the end of the discussion. Please enter your questions in the open field on the left-hand side of your webinar dashboard, and we'll get to as many of those questions as possible as time allows. Please enter any questions related to technical difficulties by clicking on the yellow Help icon, and the On24 support team will assist you. This presentation is also eligible for 1 unit of CPE credit. To receive your CPE credit, you must answer 3 of the 4 polling questions that will appear on slides during the event and be in attendance for 50 minutes or more. Certificates will be sent out 7 to 10 business days from today. Additionally, there's an evaluation survey we would love to have you fill out, and that's on your teal, can be accessed through your teal survey icon. We would appreciate it if you could fill in and submit the survey. Your feedback is helpful in ensuring we're providing valuable content in the future. And the survey will automatically open at the end of the webinar. We will be live tweeting during today's webinar. Feel free to join the discussion at #benchmarking2017. Okay, so our presenters today, I'm Paul McDonald, Senior Executive Director with Robert Half, and I've been in the, next slide please. I've been with Robert Half for nearly 3 decades, and I am really happy to be here today. Robert Half being the premier provider of staffing services throughout the world. We have 400 offices, and not only staffing, but also our subsidiary Protiviti, which is a risk consulting and internal audit practice. Tom?
Thank you, Paul. My name is Tom Thompson. I'm the Manager of Research with Financial Executives Research Foundation, or FERF. I've been with the organization going on 9 years this September, and have had the privilege to work with Paul and the Robert Half staff on the benchmarking report since its inception 8 years ago.
Thank you, Tom, and welcome. So additionally, we have 2 CFOs with us today, Eileen Campbell and Frank Stempen. Eileen, would you introduce yourself, please?
Hello, everyone. Good morning. I am very excited to be here, and my name, again, is Eileen Campbell, Chief Financial Officer for Landex, Inc. Our company is one of the biggest privately owned land development company here in Edmonton, Alberta. We're located in Canada, and we primarily deal with residential and commercial construction and sale. Previous to Landex, I had several years of public accounting practice with Arthur Andersen, and I later joined Chevron as part of a team that streamlined its accounting processes throughout Southeast Asia. I later joined other oil and gas companies and implemented Six Sigma methodologies and introduced some new processes that manage corporate risk and profit. Thanks again,
Thank you,
everyone,
Eileen.
and yeah.
Really appreciate your time today. And Frank, would you introduce yourself, please?
Yes, hello. My name is Frank Stempen, and I'm the Chief Financial Officer of Multiflow Industries. My background is working with private equity firms in the middle markets and operationalizing opportunities in the manufacturing and technology sectors. I've been lucky enough to be part of a $4 billion merger and acquisition, as well as deals as low as a few $100,000, and I've had many in between. I look forward to today's topic, and we'll hand it back to Paul at this time.
Yeah, thank you very much, Frank. And again, we appreciate your time as well. So we'll get a North American perspective from Canada and from the United States, both from Eileen and Frank. So Tom, would you take us to the next slide, please?
Great. Thank you very much, Paul. So today we'll be covering in the benchmarking report, next slide, sorry. We'll be presenting key takeaways from this year's annual benchmarking study, which was developed jointly by FERF and Robert Half, and we'll also have commentary on the various findings. Again, this is the 8th consecutive year that we have partnered with Robert Half on the report, and we produce it because we want to help you, as financial executives, gain the insights into key trends that are reshaping the finance and accounting department. Our aim is to help you realign your thinking and your strategy as needed as you consider how your organization may be impacted by these changes. The report is, as mentioned earlier, it was an online survey of more than 1,400 financial executives from the U.S. and Canada. We also interviewed select financial executives in the U.S. and Canada to provide additional commentary and context really to the survey findings. As in 2016, this year we discovered that accounting and finance organizations continue to wrestle with challenges around recruiting and retaining skilled talent, technology, process, and also compliance. So some of the key trends that we'll be covering today, there'll be 4 of them. They will include staffing challenges, the impact of automation, the acceleration of close times, and an increased compliance demand. Now with that, we'll begin our first polling question, and I will turn things back to Paul for that.
Thanks, Tom. I appreciate it. So this is the first of 4 polling questions, as we mentioned earlier, that you must answer 3 out of the 4 questions in order to be eligible for CPE. The first question being, which of the following trends is affecting your company the most? The 4 being staffing challenges, the impact of automation, acceleration of close times, increased compliance demands. So you can only select one and then submit your response. We'll wait a few seconds and before we push the results. But these are the areas in which we'd really like your input on. So let's see if we could push the results. So pretty, 48% on staffing challenges. The clubhouse leader for sure, which is actually where the report, and we're going to start with staffing challenges. So next slide, please. I'm glad we put that first if that's the most important. So let's talk about staffing challenges in today's dynamic job market, such as talent shortages and increased turnover. All these can have a truly significant effect on your organization's productivity, ability to innovate, and future growth. We're going to look at some solutions to these challenges as well. Next slide, please. One of the most dramatic trends we're witnessing in finance and accounting is the talent shortage. Currently, unemployment in this field is extremely low. In the United States, it's 2.2%, according to the U.S. Department of Labor. Our survey revealed that 62% of organizations with revenues over $5 billion U.S. dollars are understaffed. These large companies are experiencing a dramatic drop in resources. What we're seeing is that finance and accounting professionals who come to the table with other highly sought-after skills and experience, for instance, knowledge of ERP systems or cloud computing technology, are in high demand and short supply. Another factor contributing to the talent shortage is the wave of baby boomer retirements across North America. So we're going to ask Eileen our first question, and that, have you observed a similar pattern in Canada? And if so, is there a talent shortage in Canada and at your company, and what do you think contributes to that?
Well, Paul, Alberta, which is primarily an oil and gas province, the past 2 years we actually experienced hardship in terms of employment losses, and some businesses actually closed. So had you asked me this question, I'd say 3-4 years ago, I would say 100% we are understaffed. But now we're having problems actually with on the opposite. People are coming to us and say, hey, do you have job openings and all that. But in terms of technical skills and finding that right talent, I would say it is still difficult, as you said, to find the right talent, the right employee. Right now, we are looking for employees that have experience in ERP systems, cloud computing. We did our cloud-based solution last year, so we need people who are experienced in that, and that is hard to find. So an example, our project manager was a civil engineer. It took us almost a year to find him. Although there were a lot of applicants, it took us almost a year to find the right person. So I would say yes to that question.
Yeah. Yeah, and again, ebbing and flowing with the oil and gas prices, right?
Mm-hmm.
Unfortunately, you're experiencing a little higher unemployment in Alberta than maybe in the past.
Mm-hmm.
Yeah,
for sure.
Thank you. The technology skills, though, those ERP and cloud computing skills are still in short supply. Yeah.
Oh, very.
As you mentioned, it took you
still
a year.
in really short supply right now. So it's hard to find them, right? But it's coming. Like people are getting their trainings and, knowing their way around that kind of competencies.
Exactly. Thank you. So next slide, please. Over the past several years, an abiding theme in finance and accounting world is the difficulty in recruiting and retaining skilled talent. Finance and accounting leaders are particularly concerned about how to address advanced skill gaps. Increased reliance on automation requires accountants to have different skill sets than in the past. In the past, finance professionals entered data into systems. Today, they must also be adept at pulling data out of the systems, analyzing, and presenting the data. Both current employees and experienced new hires often lack these skills. If they have excellent soft skills, communication skills, for instance, but are short on technical skills, as Eileen just mentioned, additional training and professional development can make up for these weaknesses. When it comes to new hires, sometimes you might have to take a chance and bring in good raw talent. If the candidate has 70 or 80% of what you're looking for, think about how you can push that person to 100% through training and augmentation. To make sure there's a good match, you should set expectations not only about the position the candidate is interviewing for, but also about paths for professional enrichment and advancement. So Frank, as a CFO, what have you noticed about the expectations on new hires? And what strategies have you used to address the skills gap and help them advance?
Well, to that point, we've actually had some hires that we've done recently in AP, AR, as well as payroll. So I've recently gone through this. So there are two separate types of new hires, recent graduates and experienced individuals. And, of course, you have different expectations with both groups. The ones that are new out of school, they have the book knowledge, but at many times they don't know how to tie together what is needed to address the practical needs of the company. The expectation is that the individual will be more of a project, and they'll need to move through the process on a step-by-step basis. What we've done in those particular instances is we put a strategy where we put them into a teamwork. We found that the new hires, freshly graduated individuals, were better at working in the teams. And in a few months, we could have them go through a cash application, an AP, and an AR situation so that over time, they understand the way that the process works and the way that accounting works. Where the experienced individual, they may have been fantastic at their previous company, but now they need to understand how a new system works, and they need to know how to get that information that made them exceptional at their previous company. And what we've done is we really had to tie that individual more with the IT group or with an IT lead so that they learned the methods to pull the reports and to pull the informations. So far, both methods have been successful in getting the results that we're looking to obtain.
That's great. Yeah, good strategies and tactics. So next slide, please, and reliance on interim employees. One way businesses are addressing hiring challenges are actually relying on these project professionals, particularly in areas of AP, general accounting, and AR. Temporary employees are also hired to fill payroll and tax accounting. You'd read that in the report, and hopefully you get a chance to download that report. Overall, smaller companies tend to hire more temporary professionals than larger companies. Many organizations also engage interim accounting and finance professionals to assist with high-priority initiatives, such as financial systems and compliance. Often, core staff members lack the time or special skills required to manage these types of projects, so hiring resources on a per-project basis makes good sense. Eileen, if we could start with you, have your firm seen an uptick in hiring of interim employees, and what are some of the key drivers that you're seeing?
Well, we usually hire interim employees during situations. Well, we have to fill in maternity leaves or sudden resignations, or we just cannot find the right fit. So we're in a time crunch, so we need somebody to come in. So we'll hire that kind of employee. It could be less experienced or newly graduate, and then just to test them out. If they fit into the job description, and then we find that they can actually work well with the company, we hire them. We convert that interim employee into a full-time employee. But if not, then we will definitely wait for the right person to come in and make that employee or future employee as a permanent employee.
Great. And Frank?
We've definitely had an uptick along these lines. We've brought in specific individuals to help with tax accounting on a project basis. The reason is we no longer have the skill set needed to address the many specific and seemingly never-ending changes across many states in the U.S. and the different now county laws that are going into effect. As we grow, we may need to look into creating permanent positions for tax as an example. But at this point, the business needs don't outweigh the cost of someone with that particular talent set. So we'll continue to address these particular situations by hiring of interim employees.
Thank you. Good strategies again. So next slide. When you have ready, willing, and able employees, you want to do everything you can to retain them. A recent survey we conducted reveals that 42% of workers said they're likely to look for a new job within the next year. And for millennials, the statistics jumped to 68%. The financial executives we interviewed for the benchmarking report shared some of the retention tactics their firms are using to keep the best people, including making it a practice to map out a career plan with new employees. Additionally, providing employees with opportunities to work on challenging projects with complex transactions or involve travel to other countries. Keeping employees busy was another tactic, even during slow periods, so they feel needed and valued. And then supporting employees interested in pursuing formal studies, connecting them with appropriate mentors, encouraging them to interact with other departments across the organization, so they can deepen their knowledge of the company's operations. Just some strategies that came out of the report, which you can further read into when you're reading the benchmarking, the finance and accounting report. So Eileen, back to you on a question. What strategies have you implemented to help improve retention?
So before the oil prices plunged 2 years ago, Alberta was a very competitive job market. It was hard to find the right talent, the right fit. So all companies throughout the region actually upped their compensation package. So what we found is that, as you mentioned, like non-monetary benefits actually attract more the younger, talented people to come in and stay with the company. So we have started putting in like free membership for our employees. We also have free Costco membership. We cover all of that. And we also, as you mentioned earlier, we also cover their training, their professional development, and we also engage them in future projects. So although they might be new or not as experienced as some of our senior managers here, we put them into our IT system implementation, which we did a year ago. So that really challenged them and motivated them in staying with the company. And from what I've heard, the feedback, they really love that kind of strategy in professional development with the company.
I loved what you said too. It's free. Sometimes some of the best benefits are free.
That's right. Exactly, Paul.
Yeah, that's great, Eileen. Next slide, please, and we'll talk a little bit about investment in millennials. And seasoned finance executives and accounting executives are no stranger to change and are well aware of the influx of millennials into the workforce. In fact, the majority of the workforce are made up of the millennial. Within the millennial generation, as you see here, there's Gen Y, which would be on the older end of the scale of millennials, and then Gen Z, the younger scale. That commonly is referred to. Those two cohorts are referred to as millennials. Sometimes the millennials view older generation as resistant to change, and that's one of the reasons they move on and turn over. So with that in mind, I would encourage everyone here to listen to millennials and embrace the change. While they have aspirations and characteristics similar to other generations, they have unfortunately been subjected to some negative stereotypes. According to a recent report, some senior executives have trouble seeing this generation as the executives of tomorrow. In our belief, this is a mistaken view. These misperceptions can be corrected by gaining an understanding of what millennials want and how they prefer to work, and then ultimately having us maybe change to meet them if it is reasonable. So, above all, millennials value personal growth and approach their careers as part of their personal mission. They seek meaningful work and aspire to have a positive impact on society. Since they don't like conformity, they thrive in innovation-driven organizations and tend to be more creative. And of course, they are comfortable with technology. By understanding what makes these generations tick, finance and accounting leaders like you can find ways to groom millennials for future management and executive roles. Encourage them, embrace their unique talents, and provide them with opportunities to learn and grow through formal education opportunities, mentoring, and challenging assignments. So having said that, Frank, how can seasoned workers and managers from a different generation open lines of communication and collaboration with this cohort of millennials?
Well, we've also found that millennial generation is much more computer savvy or comfortable with technology. We've tried to give more projects on creation of new methods or updating those 20-year-old systems that, I don't know, most of us probably still have, to those individuals. And as they'll work with the older generation on what is needed, they'll see how they can improve what was done before, and they can show their value. In this method, there's no one generation leading, but the team of workers working together to see how both sides can accomplish the goals. One of the best things we've done is set those expectations. And though each person needs to be managed individually, there's no preferential benefit to any one group. And one of the points from your last comment was we've actually put in a flexible work schedule other than during the close process. And we found that millennials prefer to take advantage of that later start and put the time in later on than some of the other generations.
I like that. And Eileen, some comments around how these people can open lines of communication?
Well, in our corporate culture, it's a mostly open door system, and I'm sure a lot of organizations does that now, is that they leave the door open for anyone to just come in and just ask the questions. We actually just had hired 2 new employees, and I can say that they fall within that millennial definition, and they're very computer savvy, as Frank said, and very open to the new ideas. And what they bring into the organization is their energy. Like you can see, like they're very energetic. They're excited to bring in new changes, new ideas. And our role as managers is to cultivate that idea, and not to say, okay, that we've heard of that and we won't go through that anymore. But just encourage them to be more open, to have a really vigorous discussion on things that's happening in the company. And yeah, it's a fresh air of coming into our organization and giving us more life, I think.
That's great. I like the team approach and harnessing the energy to capture the idea and to keep them engaged. That's great.
Yeah.
So now I'll turn the discussion over to Tom for the next trend.
Great. Thank you, Paul. So let's switch gears from the people side a little bit to the tech side and take a look at the impact of automation. So cloud technology has been gathering momentum over the years and certainly within the accounting and finance field. In the past, the idea of cloud adoption was met with resistance, to say the least, and certainly in part because of security concerns and in other part because of simply inertia. But over the years, however, we've seen financial executives are much more comfortable with the idea of implementing cloud solutions now. According to the survey, we found that 72% of U.S. participants have either adopted cloud solutions or intend to in the near future, and that's a 10% jump from last year. And in Canada, it was an even larger 20% increase. And that will now bring us to our next polling question. So again, remember, you do need to answer at least 3 of the 4 polling questions to qualify for CPE credit. And the next polling question is, does your company use cloud-based solutions for any of its financial systems? And your answer options are A, yes, B, no, but we're planning to, or C, no, and we're not planning to. Just give folks a moment to get through that question. And certainly to what was discussed just recently with the millennials, obviously this is another potential opportunity in switching to cloud-based solutions to allow those younger employees to showcase that technological skill and perhaps assist in the change. So just give another roughly 10 seconds or so for folks just to make sure they can have an opportunity to answer that. And then we'll push the results and take a look. And if we can push the results, that would be great. So just about 47% are presently using it, with an additional almost 27% planning to, at least in the future. And then just over 25% there at the bottom, not planning to, not currently, and not planning to. Interesting. I'm about in line with what we would expect. So we'll go to the next slide and we'll take a look at some of the benefits of cloud solutions. So the question, I guess, would be, why are cloud-based technologies gaining an acceptance? And certainly they're affordable, they're flexible technologies that can help resource-constrained teams become more efficient. Organizations are also realizing that their legacy systems can be costly to maintain and eventually may no longer be supported by vendors. Compliance demands also, which we'll take a look at in a little while, they're also compelling executives to take a look at cloud platforms that can analyze documents and generate reports. And additionally, some teams are using cloud-based systems for data mining and analytics as an effective means of gaining intelligence to improve their business processes. While it may take some months still for a full implementation of cloud technologies, the payoff is usually worth it. And with that, I'd like to ask both Eileen and Frank. I'll start with you, Eileen. Can you tell us a little bit about cloud adoption at your company and whether or not that has extended into the finance function itself?
Sure, Tom. Actually, 2 years ago, that's when we started talking about, okay, there is a new cloud-based solution available now, and everybody's asking what is it and what it does. And one thing that we definitely realized within our organization is manual processes actually give us about 2-3 days, sometimes even a week of delay in sealing the deal, like signing up the contracts, because everything's in paper, and we have to, once everything's signed, salesperson comes back to this office, and then our accounting group does the recording, recognition of revenue. So it takes us a while to actually see that revenue flow through our books, and at the same time, inventory management is also affected. So 2 years ago, we said, okay, let's go into cloud-based solutions, and we implemented it last year, and we've seen significant improvement in our processes. So now we can do our contracts within a day. Our salespeople will be meeting with our builders, signing the contracts within the day. Our accounting department will see that information flow through the system. We review the information, and our revenues are updated also that same day. So it's a big improvement in all of our reporting and information. It's more real time. And in terms of document management, we don't have to say, okay, where is this file? Where is this thing filed right now? Everybody's on SharePoint. We share the document. We look at the same version of the document, and it's not superseded or has been replaced by a different document. So it was a big accomplishment for the organization, but I have to say, as you mentioned, it is not easy. Like, a lot of our employees were excited about it, and a lot were actually also saying, well, this is, it's a little too much of a change. We don't need to change. There is no need to do that. But it's change management, right? But overall, I think everybody's happy with what we've done.
Great, thank you. And Frank, how about in your organization?
We're currently in process, so we're going through the initial phases and the trying to get over everyone's difficulties with the change and creating that paradigm shift. So we haven't adopted it fully at this point, but we've been doing different evaluation of the financial benefits. As a backup and recovery system, it's going to be much, much better than what we currently have, and sending the stuff off-site and having it back up in a third location. So currently we're in process, but at this point we really wouldn't be able to discuss a whole lot on it because the benefits haven't been shown to be fully implemented at this point.
Okay, appreciate that, and it's certainly understandable. And with that, I will turn things back over to Paul, and he'll be discussing close times.
Thanks a lot, Tom. And I think it couldn't be a better lead-in from Eileen into the acceleration of these close times. So, even though finance and accounting departments are showing increased awareness of the benefits of automation and technology, they're still using manual processes in certain areas of the operations. For example, account reconciliation, which usually takes place quarterly, is still largely an extremely labor-intensive, complex manual process with many dependencies, including input from sales, legal, and other departments. Our research reveals that 58% of U.S. firms and 66% of Canadian firms still rely on manual reconciliation. Of course, there are other options available, like internally developed tools or third-party software products like a Blackline or a Trintech, to name two. And let's, before we dive further into the acceleration of close times, let's pause for our third polling question. Does your firm use third-party software or other technology to automate its account reconciliation? Yes, no, or not applicable to you. I know that this is an area that we've seen grow tremendously, but I was kind of taken back by the survey again this year, revealing that 58% of the U.S. firms and 66% of the Canadian firms still rely on manual reconciliation, and Excel seems to be the clubhouse leader year over year. Tom, that's what you saw too, right?
That's correct, and that's been for several years. Excel is always the leading tool in that area.
Yeah. So hopefully you've all had time to make your selection and hit submit. Why don't we push the results to the audience, please? Does your firm use third-party software or technology? And it kind of falls in line with what we in the survey. So again, I think the cloud-based and some of these external tools can help with the efficiencies. And I heard Eileen say saving 2 to 3 days, or delay 2 to 3 days, and maybe a week in some instances. So, room for us to use automation in the future, third-party software. So next slide, please. So in spite of using largely manual reconciliation processes, companies are not only meeting benchmarks, but they're actually closing the books more quickly in spite of that, right? So companies both in Canada and the U.S. are shaving off 2 to 3 days, where in 2016 it might have taken a U.S. company 25 days to close their books. Now it takes 23. Next slide, please. Some companies have invested in technology tools that enable timely financial reporting and have had great success, while others use a mix of manual processes and automation for account reconciliation. Nonetheless, many financial executives are reluctant to transition from manual for various reasons. They feel too busy to take the time to investigate other options. They have explored several solutions but haven't found the right fit, and they want to keep things simple. So here's a question, Frank, for you. I understand that Multiflow, your company, implemented a new system for scanning products entering and leaving the building. And this had a dramatic impact on shortening the close of business processes. Can you tell us more about that?
Yeah, that's correct. What we found is scanners are also used for our sales and inventory, so it's all tied together now. This is one of the first aspects that we've actually put into automation. By scanning all the products in the inventory, when there's a sale at any of our locations, and we're in many different states in the U.S., it's able to pull the inventory from that particular location. And the next day, we don't do an automatic upload instantly. It would just be too much for our systems. We have an overnight upload. We're able to have the revenue reported, the balance, the cash that was deposited. We use about 4 to 5 different banks that are more regional banks. So we get all of that information. This has allowed our close to go from 10 days to about 5, and we no longer use any of those paper invoices.
That's great. I mean, that's 10 days to 5. Have you ever, again, I might be asking a question that, have you ever tried to put a price tag on that?
Well, when we originally had to do the programming, that was the most difficult aspect. The programming isn't exactly cheap, but the cost in paper alone, let alone reducing down the middle office that we had that was entering in all of this information, we've saved hundreds of thousands of dollars, if not millions, by going to this type of a handheld system.
Great ROI. Fantastic. Thank you. So I'm going to turn it over to Tom for talk about our final trend.
Great. Thank you, Paul. So now let's turn our attention to everyone's favorite topic, compliance demands. We can take a look at a recent question. From the survey, we found that most companies foresee the compliance burden will increase over the next 3 years. 61% of U.S. firms indicating that, while 56% of Canadian firms see that in their future. And just to mention and note, just 2% of financial leaders in the U.S. and 0 in Canada have an expectation that their financial burden will fall. Now, to be fair, this question was asked prior to the U.S. election, so we'll have to keep an eye on what happens with next year's survey, but that's where things stood this year. Moving on to the next slide. Increased compliance demands, and Paul, I'll send it back to you for that.
Yes, I'm looking forward to seeing how the compliance might change as a result of the election. And the new administration here in the States. But for some finance leaders, they see a silver lining with this compliance. For example, strictly following certain compliance guidelines helps companies stay organized and develop a framework for their own internal controls. Additionally, playing offense rather than defense enables finance teams to spot red flags and remedy them before they grow into larger issues. There are 2 new standards that finance and accounting teams need to prepare for now. And the first one being the revenue recognition standard that will be going into effect by December of this year. The standard establishes reporting principles pertaining to users of financial statements about various aspects of revenue from contracts with customers. The second impact is new rules around lease accounting, which affects everything from furniture and fixtures to manufacturing equipment and real estate. Publicly traded companies must adopt these standards by 2019 and others by 2020. What's the best way to prepare? Perform a review to determine readiness and what needs to be done in anticipation of the new standards. Educate management about the changes and resources needed. Ensure that you have resources with necessary skill sets, either full-time employees or interim project workers. Additionally, get everybody involved and up to speed through training. Lastly, access technology tools that could make a difference in making this process more efficient. Compliance is an unavoidable fact of life for finance and accounting professionals. We've been living with it for quite some time. With some planning and preparation, however, it can be accomplished more systematically and even contribute towards the enhancement of other business processes. So a question, maybe starting with Frank first, can you tell us about the preparations you've had in place to address, for instance, revenue recognition and lease accounting?
Well, I've personally gone through multiple seminars because of the importance. This is something that ultimately is going to end up on my desk with my responsibility. So I've taken it upon myself to start going to these classes so that I could stay ahead of the standards. The lease accounting standard, as you said, starts in 2019. As I'm not publicly traded, it will hit us in 2020. And the lease accounting will hit us a bit harder because of the different vehicles we have on the street. I've got vehicles on the street as well as manufacturing equipment that may be leased instead of purchased. As we get closer to the implementation in 2019, I'm still sure many of those items will be brought to the board's attention for review changes. So right now it's just preparation by understanding the law or the standard that's going into effect and starting to put the information together in the same way so that it makes it easier for when the auditors come through so that you can show them the information as the standard states. And if you can give them the information easier, then you should be able to go through the process easier as well once it finally does hit.
Yes. And Eileen, any preparations you've put in place to address these two changes?
Well, for our revenue recognition, we did the system or the readiness review last year, and we got a thumbs up from our auditors. So we're ready pretty much on the revenue recognition change. Not a lot of change on that one. But with regards to leasing, we do expect, we do have corporate clients that leases our bigger assets here, like our buildings. So they might have more reporting requirements. So that's why we want to get ready, and we've had our auditors come in sometime this July, August to do that review, see if there's any gaps in our reporting processes, in our accounting policies, and then we hope that by December we will be ready for 2019-2020, get that going.
That's great. And there's various courses that seminars that are being given on these topics. Some by Protiviti or your outside service providers. So I would encourage everybody to take advantage of what you see. FEI and FIRTH
sure.
co-sponsor. Yeah, there's a lot of opportunity to come up to speed on these two changes. So thank you. So now here we're going to go to our last polling question number 4. As you read this, we're going to have a little fun with this question. Who is your favorite movie or TV accountant? A, Chris Wolf in The Accountant. B, Skylar White in Breaking Bad, if you haven't watched that show. Skylar White was the accountant. Andy Dufresne in Shark-Shane Redemption. And D, the entire accounting department in The Office TV series. So again, we're having a little fun with this one. Tom, to put you on the spot, which one would you select?
I actually was going to say, I know who mine is, but I'll temporarily hold off just because I don't want to skew results. But once we do see them, I'll certainly chime in on if that was in line with what I'm thinking.
Okay. Well, I know that I have my favorite too, but they're all good. They're all good accountants, especially the whole group in The Office. But if we could see the results, please. Yeah, almost. Yeah, that was my favorite. Was the Office. How about yours, Tom?
I did. I came in second with Andy Dufresne, actually.
Okay, that's fun. All right, Eileen, do you have one?
I have Andy Dufresne too. I just love him.
Okay.
He was so smart on that one.
And Frank, would you like to share with us?
I'm right there with you with Andy Dufresne.
There you
we
go.
go 3 for we're having a little fun. Okay. Well, let's go to the next slide, please, and just talk about a few key takeaways. if we could, maybe go down, each one of us, just take a few minutes to go through the key takeaways. And Eileen, could we start with you, please? Just key takeaways here.
Sure. For sure, like in terms of technology, that is going to impact the finance industry. Like whether you're working in a public sector or the private sector, like we have to be keep in mind those impact, and that to make sure that as accountants or finance executives, we are keeping that impact in mind, and that we will still be able to provide value to the organization and growth. And I heard somewhere down the line, artificial intelligence will be, coming in and overtaking some of our work as accountants here. So we have to be smarter than them.
Yes. And Frank, any parting thoughts?
Well, as we started off, I still believe the staffing challenges are the most difficult to overcome. We're all fighting for the best and brightest talent in the marketplace. The automation, increased speed, expectation of close, and all compliance can be addressed through having the proper talent in the positions. We need to continue to train our people to the best available information, so when a new challenge arises, a new compliance happens, we'll be more capable of meeting those issues with confidence. So I think that it all comes down to getting the right people in the right positions and training them appropriately over time.
Yep, well said. And Tom, some thoughts?
Sure. So I think for me, the important aspect of it is that it isn't just simply a people issue. It's not simply a technology issue or even a process issue. It is the way that they kind of interact with one another. And hopefully this report provides people the keys to look at for their own organization so that they can determine where they may need to strengthen up. Maybe it is the people. Maybe it is the technology to keep in line with their peers. So for me, that's kind of the key takeaway is the play on each of those different areas.
Yes. I would offer up, in addition to that, maybe a little redundancy with the staffing issue. Technology is going to move fast, and even faster in the future. I think that I'm always surprised at the number of manual reconciliations that are still being performed around the United States and Canada, this being the 8th year, and it continues to be one of the key takeaways for me, that the investment, but then I go back to Frank's comments, and the return on investment when you do bite the bullet and move ahead with the appropriate technology, the cost savings are definitely there. The staffing challenges, unemployment ebbs and flows, but it's always key to keep your people engaged in order to retain them, and to listen to all generations and as leaders, as finance leaders, and help them work together. That's our job as finance executives. So with that, we'd like to go to the Q&A at this point. So I'm going to try and answer as many of the questions as possible. There's a host of questions here. I'm looking at the inbox, and if I could if we could go to the first question, and Frank, I'll address this to you. What have you found to be the most effective way to get employees excited about, or at least comfortable with, transitioning to the cloud?
The change, the ease with which it's going to happen when they finally get it done. Most people are just afraid of change, or they don't want to have that paradigm shift. And what I found is once they realize that it's truly not going to take a job away, it's going to make their life easier over time. I think that, that confidence and comfortable view that I've worked with those individuals, and they trust what I'm going forward with, that they're more comfortable that their life is going to get easier because of it over time, not just become more difficult with more technology that they might not understand.
Yep. And Eileen, any comments here?
For sure. I agree with Frank. It's really about preparing your team and making sure that they understand why the company is doing this big investment. IT implementation is not something that you just do. Like, it takes a lot of time and money. So the organization, the employees need to know why they're doing it, and once they're on board, for sure they will be 100% in, and they will make sure that project is successful.
Yeah. Next question, and I'm going to, the question is this, how do you manage a flexible work schedule, like, for instance, tracking hours? Do you have an honor system? Is there another way that you do this? And, I'm not sure, Frank, if you want to try and take that first?
Well, since I said that one of the things that I've done with some of the millennials has been a flexible work schedule, we really don't have clock in, clock out times. There's many times where I might be in the office at 11, 12 at night sometimes during a close. Because the next day my kid might have a baseball game or something along those lines that I really want to get to. So everybody really has an expectation of what needs to be done. And a lot of times when you're doing the close or anything in the accounting, you can only go so far before the previous person has to get done what they need to get done before you can do what you need to do. And I think that the respect as a team has shown that flexibility, they work better together, knowing that, I'm going to work harder for this guy. The next time he's going to be able to pick it up. While I'm on vacation, they can pick it up. So we really use the flexible time, and it's more of an honor system, and we have to get the job done as a team together as a group.
Mm-hmm, mm-hmm. And Eileen, when you look at the, you said free benefits, some of the free, some of the things you did because of, the economic climate dictated that. Could you dive a little bit further into that and how you explained to some of the employees that, this is what we have today and this is about as good as it's going to get under the current economic climate?
Well, they were very appreciative of those things because in a really difficult climate, like finding a really good job is hard, and even more so finding a company that is vested in the employees, it's harder to find too. So the employees appreciated it and enjoyed that kind of perk. And another, similar to Frank, we also have that flexible hours. So when they have their free membership, they can say, the millennials will be like, instead of going to see a movie, they can use that membership and go to the gym, be healthy. And we're also thinking of down the road, this could be not this year, but down the road, we're thinking of maybe something more of instead of like your usual dental medical benefit, we're thinking of more of if you, instead of using that medical dental benefit, you can use it for, buying a bicycle or being more active. So that's something that we are working in the works right now.
Great. Next question I'd like to address, how do you hire for personality fit? It's hard to analyze the personality fit in just a couple relatively short interviews. Frank, would you like to take that one first?
My interviewing method is probably not as normal as most others. It's really all about the personality. I expect when I'm interviewing somebody that they already have those skills. They already know the basic accounting aspects. Either a recent grad has already, from their grades, or somebody that's more experienced, they'll be able to talk about what they've done. So really, I want to make sure that it's more of a personality fit than anything else. Normally, I don't go in with a list of questions. I don't go in with anything. I talk to the individual. I get an idea of what they're about. Are they very nervous? Are they, call it the prototypical bean counter type of accountant? I want somebody that's going to fit with my group. And sometimes that might not be the person that graduated from Wharton, but I want somebody that's going to fit together, that's going to make the team grow and move forward.
Right. Any tips, Eileen, on that?
Same thing with Frank. Our questions is pretty much not very structured. Like we don't have very technical based questionnaires, but we definitely focus on the personality fit because we're a small organization. There's less than 30 of us here, so it has to be a good fit. So our questions would be about their hobbies, what do they do, and that's usually after the second interview. We'll take them out for a coffee or just to see how they relate with other members of the organization, not necessarily just the accounting group.
Yes. I I agree with both of you, and I think having multiple people meet the individual to make sure that the personality of the individual that you're interviewing is a cultural fit with your organization, with your department, is a must-do. And then comparing notes afterwards and this goes right from, it could be the security guard, right through to just asking the opinion, right through to the receptionist, everybody, because the right candidate is going to conduct themselves professionally throughout all meetings throughout the organization. Just some tips over the years that we've picked up. Any comments, from you? Here's a question that's coming up a few times here, and it's on the millennial generation. Their need for cell phones to be close by at all times. How do you handle that in a professional work environment? Is it an issue for you that there's too much use of texting during business hours, or silent emailing, if you will, on the personal phone? Any comments on that, Eileen?
That's a really interesting question. I like that. We don't have like a specific policy on no texting or no chatting or Facebooking during work hours, but we do have, when new employees come in, we did revise some of our orientation procedures. We just say, okay, we don't really track you in terms of your usage of cell phone usage, but keep an eye out for your emails. Don't make sure that you have your personal chats and texts are, after office hours or during lunchtime. But we're not very strict about those things. And for the most part, our new hires are very respected. They respect the hours. They are very professional, and we haven't had any complaints. So we're good with that.
Okay. And Frank, any comment on that?
In our accounting department would be a lot different than in some of our others, such as a customer service or some of the other areas. We have a lot of metrics. We have how many phone calls are answered, how many phone calls are made, the length of the phone calls, all of those type of things, as well as I get a report on data usage on the phones. We supply the phones to most of the individuals in the company. Therefore, I know what they've been doing from a data usage standpoint, or how many texts they might be making over certain times during the day, and I would address it individually with them. Most people use about 500 megs over the course of a period of a month. And when somebody's sitting on 5, 6, 7, 8 gigs of data, that tells me maybe I need to have a conversation with that individual as to what they're doing with their time, as opposed to getting the work done, or maybe they've got more time on their hands and they can do another project or two. So it's something that, since we supply all the phones, I do get those data metrics available to me, and I usually bring it up with the individuals at that point.
That's interesting. Well, and you mentioned earlier, too, Frank, about everyone in the department and everyone in your organization knows the goals. And if they're meeting the goals, you're not babysitting. And, again, this might be an opportunity for you to have a one-on-one. They're using too much data. That means they have too much idle time, or maybe they're missing their goals, too.
That's possible.
Yeah. So it was mentioned that within this webinar about advancement is a top priority for many individuals in terms of retention, namely the millennial generation, but this goes for all employees. But some small companies have limited opportunity for advancement. Is there some way you get through that? And I think of you, Eileen, with 30 individuals. How do you coach people through that on the, maybe there's not a lot of possibility for advancement?
Mm-hmm. I do mention that to our employees. I said, unfortunately, we are a small company, not a lot of levels to go through, right? You don't have 5-tiered managers. And what I do say, in terms of professional development, we encourage them to be more, not just within the accounting department, but really be involved with other departments, like our project department, real estate development, our sales and marketing group, and our IT implementation. I gave 2 of our staff an opportunity to actually be a big part of that big project for the IT that we did past 2 years, and they appreciated that kind of experience. I don't think they would have had that kind of experience if they were in a bigger corporations where it's very siloed, that you have the specific jobs and you cannot cross-function. And that's what we're doing right now. It's more of a cross-functional development, so they can see how the entire organization operates and have a bigger view of our company growth and not just accounting.
That's great. Well, I'm sorry if we didn't get a chance to answer all the questions that were presented. Just as a reminder, you'll receive an email with a link of the recorded discussion, everyone that attended this. 1 unit of CP credit will be awarded to those individuals who responded to at least 3 out of the 4 polling questions and attended at least 50 minutes or more of the webinar. And it takes 7 to 10 days for the certificate for CP to be received by you. Again, the evaluation survey is available by clicking on the teal survey icon, and a copy of today's slides and benchmarking report are under the resources icon. I wanted to say thank you to Eileen Campbell, Frank Steppen, and Tom Thompson from Firth. This is Paul McDonald from Robert Half signing off, and we really enjoyed our discussion today. Thank you to all, and have a good day.